The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending 6 June 2025. Well, we're almost halfway through the year. Great week for the metals, particularly the white metals, platinum, silver, even palladium at the end of the week. Another thing I want to point out again, I'm on the landing page, themorganreport.com. If you scroll down a little bit, we put up kind of the most recent interview that I do, so you can just scroll down a little bit from the header. And if you're not on the free list, I highly recommend that you are, because you get certain insights, sometimes deals on metals, not always, but sometimes, and of course I send them out. And it's just a great way to stay in touch. Of course, if you want to bypass that, the keys to getting to our channels are here in these icons at the top: Twitter, YouTube, LinkedIn. And those are all available just with a click of a mouse. So moving on, first thing I want to talk about today is not the breakout at silver, which everybody's talked about, and we have. And if you heard the latest interviews, I'm rather conservative, and I've been at this a long time. And one of the interviews I did was breakout or fake out with Daniela Cambone late in the week. And I said, one day doesn't make a market. Yes, it's gone through 35. That's a fact. Can it maintain it? And I alluded to the Morgan rule, which all the members are familiar with, and I've done in the public domain several times. So I am looking for what happens on Monday, but I fully expect with it closing over 36 on Friday, that we will see the silver price maintain above 35. If it dropped $1, it would still maintain the over 35 rule, and that would indicate an 80% probability that is a breakout and not a fake out. So I thought I'd bring up something that I've shown in the past but haven't shown for quite some time. And this is a chart of the silver price in constant dollars. So it says here the real silver price from 1344 to 1998 in 1998 dollars. So the inflation lie has been taken out of this chart. So, for example, the highest price, all-time high, was in the year 1477 at $806 an ounce. If you use the Federal Reserve's inflation calculator and find out what a $2,025 is, you'll find out it's double that. So if you want to use it in today's dollars, just take everything I'm about to say and multiply it by 2, and you'll be there. But this is interesting because what this chart shows is silver's function as money up until the demonetization of silver around this time frame here. And we see that basically it's been in a downtrend for a very, very long time, with the exception of a couple of spikes, which I'll talk about in a minute. But as far as price is concerned, so if you go over here in the 13th century, you're looking at above $300 the ounce. Of course, today's price is $600. And that lasted approximately, and I'm doing this freehand, so give me a break, but probably a couple hundred years or so. Then it dropped down, and say this is $200 price, which today would be $400. And so it's just under that. So I'm just going to round it up to 200, but nearly 200 from that point, 1584, we'll call it, till 1784. We'll give it another couple hundred years. Then another down move, and then it stayed at roughly 90, which would be, 180 today, from 1800, we'll say, to about 1884 or 1873 when it's demonetized. And after it was demonetized, you see a really sharp fall off, a spike in the 1980 high, Hunt Brothers, down. And here's where Buffett bought. On an inflation-adjusted basis, the all-time low was right here. And that's basically when Buffett bought. So he was a value investor. And I've posted something on the community channel with Buffett talking about his silver purchase, and Charlie Munger looking like he's bored to tears. And when Charlie finally speaks at the end of this video, he's kind of berating Warren about even bothering silver. But he wasn't real mean. And what was funny is the truth. I mean, what Charlie said was, what will 2% of Berkshire's investing ability do, and it wasn't referencing just silver, which it was less than 2%, as I've talked about many times, and yet it was a substantial portion of the COMEX, very substantial. But anyway, back on point. So I want people to understand that in today's dollars, we certainly have a long ways to go on the upside. And, where is it? I don't know. I mean, the equilibrium for the last, I think it's 40, 50 years, as far as what is the average gold silver ratio, it's around 50. So that would imply that silver could double from here, from 35 to 70. If gold does nothing, it maintains around 3,500, and the ratio would be at the average. If silver outperforms gold, which I expect it will by the end of this bull market, you should see silver at a multiple, maybe 25. No one knows. People talk about 1-to-1. I've mentioned in the past that Bunker Hunt thought 5-to-1 was the correct ratio. Again, no one really knows. I think since we've already seen 33-to-1 in this bull market so far, that we will get back to that at least. And at the end, where everything spikes, I would expect it to do better than that. And you could, be aggressive and say twice as good as that, 16-to-1, what it hit here in the Hunt spike. And that would be the monetary ratio, 16-to-1. So I'm going to take a moment and show you the May issue. Came out in early May. I'm not going to read the whole thing to you, but basically I want to show you, to stay ahead of the curve, you've got to have good information. And what I wrote about in the early days of May was, where are we going? Are we going to the long-feared hyperinflationary blow-off, or are we going to a debt spiral? I talk about that. I'm going to scroll pretty quickly here, talking about the dollar still strong. Trump definitely wants a weaker dollar, the dysfunction in the treasury market. And I've said already in our view, gold may have peaked for the year and is likely to consolidate over the summer months. So for the year, that's a really bold statement. Time will tell, but certainly it looks like it's going to consolidate for the summer months. Talking about the problems in the bond market. But then I said, with spot silver recently breaking technical levels and closing the gold-silver ratio from 100, we believe silver is primed for a catch-up rally, provided gold does not fall apart, which of course we don't think will happen. I said if we get the silver-gold ratio to 70, which it's just below 100 now, we'll put out an alert, and I talked about why that would be the case. And I also talked about, really, if you wanted to profit from gold, you might want to write some options on your gold stocks. You might want to sell some gold. I really wouldn't necessarily recommend it, but that, there will be a time frame where you could probably sell it in May, go away, come back and after Labor Day and probably buy it back for the same price or thereabouts. And that's, again, a rather bold statement. To be clear, it's not time to abandon the metals for the long term. Remains intact. If you made substantial gains in gold or the miners in the past 12 to 18 months, it could be time to lock in partial profits. And I'm a fan of taking partial profits. One, psychologically, it feels good. You've made the right choice. You did a good investment. And why not reward yourself somewhat? There's the old adage, you never go broke taking a profit. Talked about the juniors, talked about where I saw gold, telling how kind of stop I would put on it. And then, of course, I talk about platinum later on, and platinum's had quite a run. And I think both silver and platinum are going to play catch up to gold. Where that lands, I'm not sure. So I'll leave it at that. Make a great weekend. I'll be back with you next week with another weekly perspective. But based on the historical records of silver being coveted as money, it certainly has a long ways to go. So, hi-ho, silver away. This is David Morgan signing out.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't fix itself.